If you are still entering trades without understanding liquidity, you are probably liquidity. So in this video, I'll explain what is liquidity. People made it so complicated, but it is actually not that complicated. So liquidity is basically where a lot of orders are resting, or you can say resting orders or pending orders. So like obvious highs and lows. So liquidity is pending and resting orders. Yeah, it's that simple. But I'll explain later, like on the real chart examples. Liquidity sweep is when we take out and fill these orders or pending orders to be able to move price to the opposite direction. Okay, like it's like reversal, you can say, like price reverses when it sweeps the pending orders, so we call it liquidity sweep. So where you should actually look for liquidity on your chart, so like previous day highs and lows, you can look for high time frame, high lows. From high time frame I mean like 4-hour high lows, you can say 4-hour, and daily, weekly, monthly, or whatever. Like you can say 1 hour also, but yeah. And session highs, lows. Yeah, that's it. So now you know that what are draws on liquidity, like where liquidity lies and all. So I'll also tell you that we're like types of liquidity, like there are these two types of liquidity also, you can understand. Like internal liquidity is like inside the range, like internal liquidity, and external liquidity is outside the range. Like outside I mean the major highs and lows, you can say, okay. And internal I mean like you see those small highs and lows. I'll show you guys in some examples like on the chart, so let's go. So let me show you guys what liquidity actually looks like on the real chart, because once you know where to find it, the market starts making a lot more sense. Okay, so let's see some examples. I already marked here some examples for you guys. Let's look at this one. Okay, first look at this previous high. You can clearly see price created a clear high here and then moved away. Now ask yourself, where are traders likely to have their stop losses? You know, exactly above the high. Obviously you can see there were like sellers who had their stop loss right here. Now look what happens here. You can see price comes back to this area and takes this high and then sharply reverses. That's a liquidity sweep, and that's a clear example of liquidity sweeps. You can always see here as well. Here also mark the same thing, and here and here. Take notes, you guys should take notes on these things. The same thing works on the downside. A previous low can hold sell side liquidity because traders who are long may have their stop losses sitting here. So here you see a sweep happen and price boom reverses back. Most of my trades are based on liquidity, like all of them, not most of them. All of them are based on liquidity. So now one important thing, a liquidity sweep by itself is not automatically a trade. Just because price takes a high doesn't mean you have to like instantly press sell or instantly press buy. You have to see what price does after a liquidity sweep, like displacement or valid market structure shift, or you have to have a valid entry model to enter a trade, like based on your strategies or whatever. Next time you guys open your chart, don't just look at candles, mark your draws on liquidity, because once you start seeing liquidity, you stop looking at the chart the same way. Okay? And if you guys want more videos on liquidity, market structure, or anything else you are struggling with, let me know in the comments. I'd love to know what you guys want me to cover next. Okay, good luck, y'all.